Short sellers in AMC stock have now paid over $1.9 billion in fees, aka costs to borrow fees. And get this, 2023 alone, the first quarter. This is over three times the total dollar amount that is currently sold short in AMC stock. So that means the average cost to borrow rate has to be over 300%, which means that in the near term, you're very much likely to get a rally. And that rally might actually start tomorrow. Not a guarantee, but when everyone is so negative, it's usually not the time to be negative. Usually you can see upset rallies, and that goes for if everyone is super positive. Well, no shocker there, you might see a big red day. When everyone is so negative, again, no shocker, you might see a big green day. So we're going to get into that, and I think that is vitally important to know. Also, you're getting AMC's perfectly popped popcorn now hitting the Walmart shelves. And I think this could be a good fundamental development in the right direction for AMC. So that is only the tip of the iceberg of what we are going to discuss here in this video. Hit the like button and subscribe to the channel, but most importantly, comment your questions or concerns down below in the comment sections and share this with an ape friend. Now, let's get into this. This is the most intriguing thing that I've seen in quite a while. AMC stock short sellers paid $1.91 billion in fees. And why I think this is so significant, because if you actually look at the amount that is currently sold short in AMC stock, the dollar amount, it's sitting at just under $700 million. So you're over 3 times this number in losses alone for Q1. This means that costs to borrow fees on an average basis have to be over 300%. And we've broke down this math. This whole arbitrage trade, literally the whole trade, is probably worth about 120 to 150%. Meaning that that's how high Ape theoretically could go to match up to AMC. That's the running hypothesis of kind of where Ape and AMC would level out. That means that shorts that got into this trade right after it was announced in early January, well, they lost money. They're going to completely lose on this trade. So I think the urgency to see something happen and to see this reverse split happen is a cause for concern for the shorts and is a very bullish thing for holders in AMC common stock. Now, shorts that bought in to AMC with these cost to borrow fees in the 300, 400, 500% range in the month of February, well, day by day, more of them are starting to go negative. Not just negative on their overall position, but negative on this whole arbitrage trade. Because again, you're only looking at 100 to 150% by doing this trade. And that's at the best case scenario. Could be less than that. So I think that's going to put a lot of pressure on the shorts. How could it not put a lot of pressure on the shorts? That would be asinine to think that that would not put pressure on the shorts. Now, let's go ahead and get into what this article is saying. So, short sellers, again, paid $1.91 billion in borrow fees during the first quarter of 2023. In March, AMC stock was ranked the #1 stock with the highest borrow fee rate, according to data from S3 Partners. So this is indeed the most expensive stock to short. AMC's cost to borrow rates shot up to 1,000% during the start of the second quarter this year. So not even to mention if you got in the first quarter, if you got in since the start of the second quarter, you're even more screwed as a hedge fund. Quote, high stock borrow fees can test the conviction level of short sellers, as financing costs can take a large bite out of expected alpha, S3 analyst Iyer Duansky said. Short sellers rely on brokers to have stock shares available to borrow. If the broker has very few shares of stock available, then that stock is placed on the hard to borrow list, a list AMC Entertainment is currently on. Stocks on the hard to borrow list may not be short sellable or have higher stock loan fees, hence why we're seeing AMC's cost to borrow rise significantly. S3 Partners estimates AMC short sellers paid a total of $1.91 billion in stock borrow fees in the first quarter of 2023, up from $1.54 billion in the fourth quarter of 2022. These numbers are insane. Insane. Like, you have not seen a total amount of AMC legally sold short over these $1.5 billion to almost $2 billion numbers in a very long time. So the fees that they are paying alone make this trade unprofitable, not to mention if AMC stock does rally, because that's the big question. It's one thing to pay these fees. That's one thing in anticipation of this arbitrage trade. But what if AMC goes higher? So you're not only having to pay a ridiculous cost to borrow fee, but you actually start to lose on the trade itself. That's where you can see a mad rush to the exit door and get a short squeeze. That's the premise of all of this. Screw the borrowing fees. Really, I mean, they could probably afford that to some degree. Not if AMC stock starts to rally, and not if shorts, some of the smaller guys that are more vulnerable to price fluctuations in AMC, start to cover and drive AMC's share price higher. That makes the big dogs get in trouble pretty quickly. Now, to make matters even worse, AMC Entertainment is up nearly 30% this year to date, which means 2023 has not been a good year for AMC short sellers. Sources such as Ortex and Stocko Tracker are reporting AMC short borrow fee near 200% today. However, Ortex reports AMC's max cost to borrow at 1.05K. And this article, again, I don't think I mentioned, is from today, April 20th, 2023. Now, goes on to say, the cost to borrow per Ortex is the annualized percent of interest on loans, typically borrowed by brokers and hedge funds. AMC stock is currently hard to borrow, which is why brokerage firms have been increasing their short borrow fees. Investors going long on the movie theater company have been buying and holding their stock for over 2 years now in efforts to drive shares up again and squeeze short sellers from their positions. Today, AMC's short interest has risen to 26.39% with at least 192 million shares out on loan. AMC short interest was only 23% when buyers were able to squeeze a percent of short sellers from the play, sending share prices to their all-time high of $72 per share. So on top of these cost to borrow fees and this trade, one would say becoming null and void, this arbitrage trade, you're at the highest short interest levels that you have seen throughout this entire trade. I think this would be a very different story if AMC's short interest was 15%, 16, 17, 18, 19, 20%. But that even extra 6% from, 20 to 26%, a little bit over 26%, is a very big deal, because keep in mind, in that June rally, when AMC short interest was around 23%, it only ever dropped to about 16, 17% when the share price went to $72. So imagine what would happen if the judge does, do a revote, or does do some kind of bad incentive for the shorts. Because let's be real here, the judge has no incentive to help out the hedge funds, at least from what we can tell, but to make sure that this was fair and AMC did not break any laws doing this vote. And I think it's pretty clear that they absolutely did. So that makes me really beg the question. And if we take a look at Ortex, beg the question how AMC is going to react from here. Now, a lot of people are betting AMC is going to fall tomorrow. A lot of people. Take a look at the option activity. Look at this order that just came through. Someone lost their damn mind. This literally just came through like 2 minutes ago. Expiring tomorrow. Oh, this is a call, actually. I'm like, whoa, you're crazy, buddy. It's actually a call. A 50-cent call for tomorrow, expiring tomorrow. So someone did just make a bullish bet on AMC. I cannot find any other bullish bet on AMC. For today, at least. They're all puts. And if you look at the interesting flow sentiment, you have seen 18 orders totaling $11.16 million with a positive order value of 0%. Everyone is betting AMC is going to fall. Tomorrow, specifically. Besides this one guy right here that just made this trade. Now, if you take a look at the put to call ratio for tomorrow's expiration, calls sitting at 36.68%, puts sitting at 63.32%. And if we dig even deeper and look at the Stocko tracker data, you got about 7,500 calls in the money, 488,000 calls out the money, 264,000 puts in the money, 590,000 puts out of the money. This, let me tell you, my friends, is a lot of dry powder on the sidelines. You've already exhausted the bearish case for this week. I mean, you already got half the amount of total put options in the money. Like, they're already in the money. Whereas with the puts, or calls, I mean, you're almost at 500,000 calls out the money. 7,500 in the money. That's a big difference. So if AMC can start to see some green candles tomorrow, or even in after hours today, that would not surprise me. That would not surprise me to see a very green day tomorrow. It would also not surprise me to see a very red day tomorrow. But typically, when things look this bearish, that's when you can tend to see some of the biggest recoveries with AMC stock. Now, to make matters worse, keep in mind everything that we talked about so far here in this video. If you look at the days to cover specifically, that is at 5.21. If you pull this out to the last 18 months, you are at the highest levels that you have seen ever in AMC. Now, why is this important? Because for the same reason that cost to borrow rates are hundreds of percents, sometimes over 1,000%, is the same reason why the days to cover is so high. Because there's a lack of available shares. So when shorts do panic, and trust me, they will panic to get out of those short positions. They will drive up the price of AMC. There will not be enough shares to cover. And that's where you literally get shorts squeezed out of those positions. They will not have a choice but to cover. And I do think, given this court situation, I mean, that's the most fluid and developing story as of lately. That is probably what is going to drive this move. And I think hedge funds are way too certain this trade is a home run, when in all reality, it's far from a home run. The judge can do whatever she wants to do. The judge could institute a multiple array of not only consequences, but options. You could see a new vote. You could see, in the worst case scenario for AMC as a business and there's a reverse split, the judge could say that's illegal. You can't do this. What do you think would happen to the shorts? Long story short, I think it's a very interesting time to be bullish on AMC stock, and don't let me fool you. Don't let me sway you in one direction. I could be wrong in everything. AMC could fall to 50 cents tomorrow. It could rally to $20 tomorrow. Does not matter. My personal opinion, the stock's going higher. and I will remain long in AMC. Now, they're perfectly popped popcorn. Not too much to say on this, but you are getting reported from TW33 Humvee that there is now AMC popcorn in good old Walmart. Look at that. Look at those sexy bags of popcorn, baby. I think that's going to be a very positive development as well. And once we get some news on that, I think that could be a very big deal. I mean, look at even the reviews already. 261 reviews on this one. 190 reviews on this one. That's interesting. That makes me bullish as well. I don't know about you guys, but some popcorn doesn't sound too bad. Maybe I'm just hungry. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Share this with a friend, but most importantly, enjoy the rest of your day, and I'll see you in the next one.